Netflix is looking to utilize a strategy that has been used by Paramount as the streaming wars continue to heat up. And that's what we're going to cover in this video. So guys, please smash that like button and I'll run the intro. What's up guys, and let's dive right into this one. You can see that Netflix series Knives Out, or at least a sequel of it, is going to play in major theaters 1 month before its streaming release. And so this actually is the first time a Netflix film is going to run in AMC and Regal theaters before it actually is released on the streaming service. And you guys might recall that previously the strategy was opposite, where you would take these huge blockbuster movies and release it on Netflix without showing them in theaters first. And the one that stands out to me the most was Will Smith's blockbuster movie Bright, which instead of being in movie theaters, which it absolutely should have been, it went to Netflix immediately. And notice guys that this isn't a wide release. 600 theaters is very low. Generally when you have blockbusters open up in the US, they'll probably do around 3,500 to 4,000 movie theaters. So 600 is very low, but it marks a big change in the strategy. And of course you guys are probably wondering, why is this happening? Well, recall that Netflix subscriber count fell for the first time in nearly a decade this year, which of course caused the stock to post its worst decline that we've ever seen happen. And recall guys that Netflix for years resisted showing its films broadly in cineplexes, and in fact they just did the bare minimum needed to just qualify for awards. And so this is the first time a Netflix film has appeared in Regal or AMC theaters across 3 major US theater chains. And it's not like the theaters made it easy for them anyways, because AMC in the past refused to show Netflix titles because the streaming service didn't adhere to the traditional theatrical window. And effectively what they're talking about there is the multi-month long period between the time when the movie shows in a theater and when it streams online. And so effectively, now that everybody's losing money, they're working together to find a way for streamers and theaters to work together, which would help theaters make more money and help movies eventually reach a broader audience when they land on the streaming services. And of course, guys, recall that this is exactly the strategy that's being used by Paramount before releasing their films onto their streaming service. Paramount's CEO has come out and said that they don't necessarily expect to break even or make a profit on all of the movies that are shown in theaters, but it's a great way to recapture some of the costs before it's pushed onto the Paramount Plus streaming service. Now note, there are some analysts that do believe that Paramount's revenues are expected to go backwards, and you can't really forecast them out in a linear growth fashion into the future. But I think I could be wrong here, but I'm just not seeing evidence of a slowdown at present, but I will reevaluate the situation as it changes. And so the way I'm forecasting Paramount's revenues to grow out into the future is in a linear fashion, but at a very low rate of 3%. And that largely reflects Wall Street's view as well. But the question is, what exactly is Paramount valued at? Well, you can see here that Paramount is actually being valued by myself using a terminal multiple of 12.5 times earnings. Paramount I'm valuing at $33 per share. So compared to its current share price of approximately $19 per share, it's not super cheap. It's definitely approaching there, but I would love to see this under $15 per share. And since it's not currently trading under $15 per share, you can use the cash secured put tool that you can download from the description for free to determine what sort of the cash secured put yields are. And before you even do that, I'm just going to show it to you straight up in this video. So you can see here, I'm using the cash secured put tool that you can download from the description below. And so I just threw in Para as the ticker, the exchange is NASDAQ. I threw in the information for the cash secured put, which is the January 19, 2024 put with a strike price of $15 and a premium of $2.50. So you can see that the annualized yield for that cash secured put is $13. And of course, the net purchase price would be the $15 less the premium, so $12.50. When you compare that to the valuation that I have of $33.15, the net purchase price as a percentage of the valuation is approximately 37%, 38%. So that's a large margin of safety. So it's something to consider. But the bigger takeaway point from this is the fact that Netflix is now starting to diversify its strategy and go more in line with what I believe is the best strategy, which is using all the channels that you have at your disposal to generate as much of a return for your media as you can. And that's exactly what Paramount is doing. And so it's interesting that Netflix is now moving in that direction. I wouldn't be surprised at all if Netflix starts greenlighting blockbusters, which they first released to 3,500 theaters before they stream it on their platforms. But we'll see what happens. I'm not really sure if that's even possible. Now, how do you get access to that Paramount model that I just showed you? Well, you can get access to that model at the lower tier of the Patreon. And if you want to join us for an epic live presentation, you can join us at that higher tier. And another cheap opportunity in this market is Meta. And I recently did a video on them, which you can get to right here.